Welcome to Market View with Ike Ios and friends. This show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now.
Good morning. Mike Ios is your host for my good guest, my very good friend, which is Erin Swenlin. Hi, Erin. How are you?
I'm doing well. Are you doing well? As we were saying before we recorded, it's been a little bit of a dizzy week.
No kidding. The market, gapping up in the morning and then giving up its gains. I'm curious to hear your thoughts.
Yeah, so it's funny because when I sent you that chart, we were looking at a filled black candlestick and support holding, which it currently is as I'm speaking now and looking at it, but now we're down on the day rather than being up. What was it? Over a percentage point earlier. But, overall, the market is holding support at 370 and it's 5, which is what I bought. And so I'm not entirely bearish at this point. I've been very bullish since the October bottom. I mean, Carl and I pretty much jumped on that really early, honestly, as that being a bear market rally low. But this pullback has been a little more intense than we would have expected if we were going to have a continuation of this particular rally, because that short-term rising trend has technically been lost. But at the same time, at least so far, the intraday low of yesterday is a new bottom. And so that sets up a less accelerated short-term rising trend. So it could just be we really needed to soften the rising trend that we were looking at before. But ultimately, I think that 370 is kind of the deciding factor.
I agree.
If we move down to like 365, I think we're going down for that October low.
How about the SPY weekly chart?
Yes. I did bring the weekly chart, but before we leave the 5-month candle, I did also want to mention the VIX.
Okay.
The VIX is why I haven't gotten that bearish. Because if you look at the VIX, it really stayed over this week, even with those big declines. It still stayed pretty high. I mean, pretty low. You know what I'm saying? On
Yes.
an inverted scale, I stay high. So to me, there's just not enough bearish activity. People don't seem that worried about this decline, which tells me that there might still be pent-up energy to move it forward. Now we can go to the weekly chart.
Okay.
So the weekly chart, I just wanted to show in the fact that we had increased our declining trend. So we have that longer term that's, coming out of that 2022 top. But then we have a trend that's drawn from the earlier, August top. So what I wanted to point out, though, is that more accelerated declining tops trend line was broken to the upside this week. Now, of course, it looks like we're going to close well below that. But ultimately, again, there are certain things that are giving me a little bit of indication that this isn't like the end of the world and that, we're going to start looking at lows below what we had in October. The PMO, the weekly PMO, and I apologize I didn't send it to you with a thumbnail, but the weekly PMO is topped right now, well below the signal line. So even if we get that little breakout that is not going to hold, obviously we're going to close below it, and we're having that tipping over on the weekly PMO. That does make me a little bit more nervous again. So there's kind of this back and forth, isn't there? We have enough out there to be, not so bearish. And then on the other hand, we have things out there that are like, well, you really should be careful here. So what I'm doing with that is I'm going into neutral, which I know people love when you say that, but because you're basically saying, well, it could go either way, and that's not our job. We have to give people some thought about that. But I have to say there's too many back and forth. But at this point, it does look like we're probably going to go down to that October low.
Okay.
And that's what those other charts are telling me.
Okay. Well, let's take a little further look under the hood, so to speak. The next chart
Yes.
is the short-term and intermediate-term volume and breadth swirling oscillators.
Yes. So the STOs started moving down, right at that top. They're so prescient. They really tell you where to look for the market to go. I mean, the tops and bottoms on those indicators are spot on. And we already knew there was a bit of problem, but when I looked at it at first, when we started to see those STOs move down, at first it was to me, okay, well, we needed to digest, we needed to bring these indicators out of overbought territory, maybe not something to be that worried about. But yesterday, the STOV did move into negative territory. And what bothered me more than anything was that our ITBM and ITVM topped. The ITVM actually topped yesterday. The day before yesterday. So those indicators have been really great confirmations as to whether you're going to get a continuation of what's going on or not. And the fact that those are topping, and they're topping well beneath overbought territory, that's, again, something that's making me a bit more nervous about this particular support level holding. And again, we're going to know a lot more by the end of the day. It'll be interesting to see if we set some more intraday lows that will, take out yesterday's bottom, if you will.
Okay. Our next chart is one of my favorite indicators, the silver and gold crossovers. What is the message from their current reading?
We are finding a lot of people interested in the silver cross index and golden cross index. And to be perfectly honest, we haven't put a lot of enough emphasis, I would say, on the crossovers that each of those have on their own. Because, the silver cross, when we got that upside crossover back in July, when we got it in October, they were really on the money as far as immediate term what to expect. The SDI, and this is another reason it's so frustrating right now, is there's still indications that everything's going to be okay. And, I'm looking at the chart right now, and the SPY's back in positive territory. So what are you going to do today? But the SDI is still rising. It's certainly depressed. It's decelerating, but it's still rising. So, again, I'm kind of neutral on the intermediate term. The SCI crossover at signal line, though, was very encouraging, but now it looks really kind of toppy. But I don't usually want to worry about that until we get those crossovers. So we'll be watching closely to see if that tops, but until we really start to see some margin close between the signal line and the silver cross, I think we're okay. And then the other part is that the GCI, as of yesterday, it had not had a crossover, but there's a good chance we're going to see that. And that could be a nice setup for the long term. But I would caution, because you can see the last time the GCI crossed over back in August, it didn't lead to anything great. So while it gives me sort of a sense that the bias in the longer term might be switching, given we're still in a bear market situation and that particular indicator is so slow moving, I'm not really putting a lot of emphasis on the golden cross crossovers to the upside while we're in the bear market, because I just don't, by the time it crosses over, it's almost because we're in a bear market.
How about our next chart, which is XLE, which is one of the top performers this year?
Yes, I like materials right now too, but I'm still tentative on materials because, gold's having a great day, and that could really be the reason that the materials chart's starting to look better.
Yeah.
So I don't want to put too much emphasis there, so I didn't bring it. But energy, the reason I brought it is, yes, it's been a darling, but it's breaking out today above overhead resistance. And to me, that is a huge high sign, especially after a period of digestion that we just had for XLE. And now you can see the PMO is turning up above its signal line, and the participation under the surface is just fantastic. I mean, You've got nearly every stock above their 20, 50, and 200-day EMAs. And those golden and silver cross index readings are in the 90s. There's internal strength all over the place in energy. So I'm still looking at energy on the breakout. I like it.
Well, our next chart is the U.S. gasoline fund, and the chart itself looks good. It looks like it's put in a bottle. It's not good for the consumer, but it's good if you're trading.
Right, exactly. That's how I always look at it. As for us investors, we can at least offset the cost at the pump by being in a fund like this. It's going to go up. I do like this one. It has a big filled black candlestick currently, but the breakout looks solid. This was one of my diamonds on Wednesday of this last week. And it's doing well, and I foresee it doing well moving forward. It's on my radar for purchase early next week, or possibly this evening if we do get that close on that filled black candlestick. I think I might take advantage of that lower price point, maybe at the end of the day on UGA. But I definitely like it going into next week. I am bringing it as my diamond of the week, viewers.
Erin, anything else you would like to add?
I would just say that if anybody's interested in, Carl is now in the DecisionPoint free trading room every Monday at noon Eastern. So if you go to our website homepage, DecisionPoint.com, you will find the registration link right there to register to come to the free trading room, ask Carl questions. And then if you can't go to the trading room live, it's now being produced and broadcasted by stockcharts.com, so you'll find it on YouTube now. The polished up, beautiful recordings of our free DecisionPoint trading room on Mondays. So give those a try. I'm coming up with a Cyber Monday sale. I don't have it announced yet, but keep an eye out, and I will get that coupon code out to everybody, but it's not ready yet.
Erin, thank you. Have a great weekend.
You as well.